Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A fourth bullish white soldier on Friday and a new high for February after the previous session's bullish closing white Mariposa. It was also a direct challenge to the overhead bright red neckline extension to the very narrow reverse head and shoulders continuation pattern. It's currently at 104.91 from between mid-November to early December 2025. We also have the combined February and March 2017 lows at 104.92 nearby. These resistances capped the market on a closing basis, with the market closing there on Friday. Additionally, the high on Friday came close to setting up the conditions for February to become a monthly key reversal. Prices would need to exceed 105.32 to set up those conditions. Meanwhile, further overhead, we have the declining mauve medium moving average, currently at 105.59, entering the frame, whilst below we have the short medium moving average, currently 104.01, and the congestion zone 103.69 down to 103.32. Now, so far today, well, not really that much, with prices moving either side of the bright red neckline that is increasingly looking like a downtrend. Cable, aka sterling against the US dollar. A second bullish white soldier on Friday and a follow-on higher from the previous session's bullish closing white Mariposa. Prices challenged the nascent two-pointer upper trend line of the mid-January to date possible ascending wedge pattern, which is currently 123.44 to 125.86, piercing it but closing right on it. Coming in a little overhead is the declining mauve medium moving average, currently at 126.65. Near the September 2020 low at 126.72, and just above are the twin 50% Fibonacci lines of the June 2016 to September 2022 move at 126.99 and the October 23 to September 24 move at 127.34. Meanwhile, below we have the flatlining green short medium moving average, currently 124.83, which is within a newish congestion zone between 125 even down to 123.55. And just underneath this is the dark blue lower trend line of the ascending wedge pattern. And so far today, not much either side of the upper trend line of the ascending wedge pattern right now, and looking like an indecisive doji cross of all things. US dollar against the Japanese yen. A second bearish black crow on Friday and a follow-on lower from the previous session's combination of a bearish harami, if only just, and bearish closing black Mariposa. That session was also day 2 and a 2-day pipe top, when prices have punched down through the gold long moving average, currently 152.66, as well as the lesser Fibonacci line at 152.52. Finally halting at the combination of the October 2022 high at 151.94 and the November 2023 high at 151.92, and managing to close back below the gold long moving average. Now further down is the August 1990 high at 151.58, but perhaps more interesting is the December 2024 today uptrend, currently at 151.16. Just ahead of the 50% Fibonacci line for the whole of 2024 at 150.76. This region was the low 2 weeks ago and is the only obstacle left in the market, forming an early December 2024 to date rounded top pattern. It's actually only one left. I should also point out that the uptrend is just possibly part of a mid-November 2024 shallow bull channel. Mid-2024 today shallow bull channel with the top side well up in the 160.26 area. Just in case, further down we have the 50% Fibonacci line of the July 23 to July 24 move at 149.61, and this, along with the lesser Fibonacci line at 148.68, will be the ones to watch on the downside. So far today, well, a further decline down below the lows at 151.94 and 151.92, and even below the August 1990 high at 151.58. But stopping short of testing the uptrend further down and returning back up in between the congestion at 151.58 and 151.92. US dollar against the CNH, the offshore Chinese yuan. A second bearish black crow and a follow-on lower to the previous session's bearish below the stomach pattern. Prices punched down through the influential dark blue upper trend line, currently at 725.43, of the January to March 2024 ascending triangle pattern, but failed to close below it. This trend line extension had halted a decline in late January this year. Now further down is the rising mauve medium moving average, currently 724.01, and the flatlining long moving average, currently 721.99. Now meanwhile overhead, we have congestion all the way up to the July 2024 high at 731.13, with the short medium moving average being in there, currently at 730.09. And so far today, well, a further follow-on lower down to the rising medium moving average below, but a very interesting rejection back up and away from that right now. It's actually looking like an indecisive doji cross, possibly even a butterfly doji, which is a bullish pattern, but we'll see. US dollar against the Brazilian real. A very interesting move down on Friday. Down below the December 2021 high at 575.78, making a new low not seen since early November last year, and especially below and closing below the bright red May 2024 to date uptrend, which is currently at 572.52, that has been guiding prices higher since the middle of last year. The market stopped short of testing the next support, which is the rising gold long moving average below, currently at 567.34, and the lesser Fibonacci line at 565.07. Interestingly, just below this lesser Fibonacci line is target X in the 563.35 zone, the primary target for the drop from the large early October 2024 to mid-January 2025 rising expanding wedge pattern. The harder to reach, and it's much harder to reach, secondary target X1 is down at 541.95. Overhead we have the October 2020 high at 580.70 and then the rising mauve medium moving average, and that's currently at 587.90, near the March 2021 high at 588.04. It should be noted that neither of these two were much use as supports when we saw the market move down. US dollar against the Mexican peso. A fourth bearish black crow on Friday as prices exploited the previous session's unusual key reversal down that closed below the green flatlining short medium moving average, currently at 20.42.02, and that's held up the market more or less, that moving average, since late May last year. It was not the first close below the green moving average, but each time that we have seen one, prices have reverted swiftly higher. So watch out. The market halted just short of the combination below of the rising mauve medium moving average, which is currently at 20.22.90, and the bright red lower prospective bull channel line, currently at 20.22.10, of the possible early November 2024 to date shallow bull channel. What happens now at these two supports will be very interesting and may decide the fate of this market for weeks, if not months ahead. Now further up we have congestion at 20.57.65 all the way up to the 50% Fibonacci line of the April 20 to April 24 move at 20.99.90. Now so far today, well, a reactionary move back up, but capped right now by that green short medium moving average.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.